Hello, everybody. Welcome to this week's weekly webinar. Good to have you here. My name is Dimitri. Welcome in. Let's begin with this week. We're going to review what we did last week as well a little bit, and then continue with some more setups and have a look at where the market is at for this week. It should be an interesting one. We've got some nice formations setting up. So please have a quick read of the disclaimer as usual before we begin. All right, and let's start with the economic calendar as always, because that's where we will have a look at what's going on for this week and get the overall picture of what's happening. So Monday, there was nothing there. Tuesday, today we had the speech from Australia. This was one of the major ones for this week on the Aussie dollar. We've got later CAD on the CAD retail sales news. Tomorrow, Wednesday, we've got a speech and a manufacturing PMI numbers on Euro. And then we have a major one on New Zealand, which is why I've just put a little star on it, the rate announcement and a statement from the central bank there. So watch out for the New Zealand pairs. I'll cover that in a bit. You will see on the charts. And another major one will be the FOMC, which is from the dollar there on dollar pairs. That would be an interesting one to look at. Then on Thursday, got a bank holiday in America. So that's the dollar related, and another New Zealand based news, retail sales there, a little bit less important, but still something to bear in mind. But the main one will be the rate statement here, and then Friday will be no major news there, so nothing to bear in mind. Okay, so with this in mind, we've got the dollar, we've got New Zealand, we've got possibly CAD. Australian news speech there has gone. So let's see what we've got in the markets. So for this, let me clear this up. For this week, this is what we've got. We've got a few forex pairs, some majors, some minors. We've got gold and oil and Bitcoin for crypto. If you do want me to cover another market, or you've already looked at something, you've already got something in mind, and you have a possible scenario or setup, then feel free to share, put it down in the comments and share what you've got, and we can have a look at it as well afterwards at the end. Okay, so type it into the comments what you've got and we'll look at it together. All right, so let's go to the charts. So let me bring up the MT4 platform here and let's have a look at what we've got. All right, so just checking that you can see my chart okay. Just type in yes again or Y quickly, and let's carry on. Continue where we left off this week, and let's see what we've got for this week. All right, great. So first of all, I'm going to start with EUROCAD here, because this one I looked at last week. We looked at the continuation to buy into this level up here, which that indeed happen. We had a major pullback and we reached this level. So I'm no longer interested in this one. So we've reached the level, reached the target, and I am going to close this one off. I'm going to look instead at the others that we've got here and the continuation from last week. Let's start with the euro. This was the idea on the euro. So let me just look at the weekly here. All right, so the weekly, I was looking at these levels that I've highlighted to go bullish and continue on the bullish momentum. Last week, that did not happen. We had the whole week ending up in a range, accumulation, whatever you like to call it, and we did not reach into this lower level. And now that we have, we're going to look at the same idea continuing along, remembering, of course, that we've got the FOMC statement on Wednesday. We've reached this level, and the favored level, the much nicer risk to reward and a much nicer level to look at would be this one right here. So if there's no reaction of here, which it doesn't look like there is at the moment, I'm looking for a further drop and then a nice reaction of this level. So I'm going to delete this here and this one here, and then we can look to trade higher, looking for the continuation on the bullish momentum there on euro dollar. And I'd like to see that nice push away and then getting in on the trade as a higher probability idea on euro once we get that deeper retracement, deeper pullback, and the invalidation area would be this level here. So that's euro continuing from last week. Since we didn't get that, then we're going to review and then carry on with the same idea. That's euro dollar. Let's have a look now at another major pair, dollar CAD. So dollar CAD, similar thing, but inverse, in fact. Looking at this zone right here for the market to go into. It didn't quite reach into it last week, and we have reached into it this week. If I just extend this, and the idea was still the same, just inverse. If you have a look at the weekly picture, looking to trade into this first level down here, which is 1.312. Let's go back to the 4-hour. I mark this point as the invalidation area if this zone holds, and I was looking for that reaction, which I'm still going to look for this week. Again, FOMC, dollar-based pair. Bear that in mind. If this zone does not hold, then the next one I'll be looking for would be the one up here. So we may have to account for the possibility that this doesn't hold. We go higher, and if there's no price action, no reversal, then this would be the interesting level to look at, and then down from there. That's the high probability idea. And from then on, if I just delete this, we will have this level as a point of reference, as a point of invalidation. So again, higher prices, we'll see how FOMC turns out. May want to wait for that to play out, let the market do its thing, let it show you its cards, and then get in, then take part in it. So that's the dollar CAD, the short idea there. Next, I'm going to have a look at Euro New Zealand, another one looked at last week. I was looking at this level. We went right through it. So that may have been a loss for you, but that's okay. Let's just delete all of that we had last week. So weekly chart, still looking for that continuation to come down into this level. We've hit this level that I was looking at, and then the next target is about 230 pips away or so, 1.65. If you bear that in mind, we end where we're now sitting, a break lower, further down, and then a retracement up, getting a better price, always wanting to get a price, better risk to reward, continuing to the downside to this level. And then that will be the interesting place to look for. There's a few things we can look at here. If we have a nice deeper retracement, there's a possibility that we've got this level to look for. So a push down from there would be much more interesting because we've got a much higher level, a much better price. And then if I mark out this, let me mark out this level here, that will be the invalidation point. Oops, let me just drag this here, place it so you can see the price. These are the two scenarios: push higher and move down, or push lower, break, pull back, and then continue to the downside. That's what I'm looking at. You can see on the daily picture as well, we've got weakness every time the market tries to push up. We're going lower, and you've got these big bearish candles pushing the market down. And then we're going to look for that to continue. Okay, next, Euro New Zealand. Let's move on to another minor pair. Let's go to Pound Swiss here. Pound Swiss, Last week, we're looking at this area where we did have that push away from to continue on the bullishness. Looking at the 4-hour, we did have that move away and then these swings happening in the market. So just going to continue on that idea because that is what's playing out. That is what's happening. So we're going to make use of it and we're going to jump in on this continuation to the upside. What is that going to look like? Well, let's put this on. Let's put this on. Let's put this on. Let's take all this off. Here you see that trend line break. We got a break higher. And now we've got a new level developing right here. So what I'd like to see is a nice, better price. Let's just make this a little bit smaller. A nice, better price, if you draw a fib from the low to the high, would be somewhere down here, beyond the 50 level at the 61.8 or lower. And that better price coming down would be my desired idea. Not to say that the market is going to do that. We never know what it's going to do. It may just push higher and then just run off without us. But if that's the case, well, so be it. What can you do? Sometimes that happens. Right. At the moment, it's ranging. That better price, pullback, continuing to go higher. And we've got over 300 pips available here to the upside. Let's see how it plays out. Obviously, you want to see some price action. You want to see some development and the technicals to confirm that before you enter. So that's the high probability idea here on the pound Swiss. Let's move on to New Zealand Swiss. Another Swiss pair here. Bear that in mind. Just keep in mind that if you are going to choose a trade or choose a setup, choose one. We've got several dollar-based pairs here. We've got 2 Swiss-based pairs. So you don't want to be trading in the same direction, betting in the same direction on the dollar, because if it goes against you, then both trades go against you. Choose one, choose the cleaner setup. I'm giving you some opportunities, some possibilities here, and you can make your decision. Let's look at the weekly here to start off with. In fact, we can even look on the monthly. There's a interesting level here from many, many years ago. And if we mark this level out, we could see that there is a nice reaction here on the monthly. The candle created a reversal pattern. This price action opened, gapped lower, and then filled in over half of this candle, indicating a possible reversal. And now we've got these bullish weeks. We've had a brief pause here. And then last week was a big bar that engulfed the previous week, which suggests more bullish momentum, more upside. Where would be that upside? Well, the first level would be up here, and then the next levels after that would be up here. So I'll be looking for that continuation. So let's go to the 4-hour now. 4-hour, this is a New Zealand pair. So remembering we have got New Zealand news. Then we will see what happens with the news. That should show up some more possible volatility in the market. So let's see what happens with New Zealand when that strikes, when that hits the market. So here we have this low that was created. Then we have this higher low. And now the next possible higher low, we've already had this higher high. If you want to draw, you can see here that breach created, just pinged it above, creating a higher point. Now we are breaking structures, breaking this structure right here. So we're moving to the upside. Now, if you look on the daily, if we do close this bullish, we may engulf the previous day, which was an inside bar here. And if that happens, and we close above this swing point right here, then we could say that this is possibly the low that we're creating. What would I be expecting next? Well, we're looking at the push higher, some kind of retracement, and then continuation to the next level, the upside. Something like this will be a nice higher probability idea. Let's just consider the other possibility, So what could the other possibility be? Well, the other possibility is that we have a range, the market accumulates, doesn't trend, and we may be stuck. So let's see what it actually does. Possibility number 2 is that we go lower. If I draw a fib again, up here, we actually go lower. Let's move this to the side. Make this a little bit more precise. Let's just delete this. The other possibility is we go lower, and lower would be down here. So below the 50 level, preferably 61.8 and around this zone here. And this would be a much better price, a much cheaper price to trade from, and higher probability too. So from here, continuing up, we got a much nicer risk to reward. This is over, it's about 170 pips away. And this low down here would be the invalidation. So below here, the whole idea would be validated. Let me just delete this fib just to clear up the chart for you. That's the idea on New Zealand Swiss. Much prefer this level. Let's see how it plays out. We're going to probably have to wait with the news, because at the moment it's ranging. There's not quite clear. It's not clear either way. It's not clear either side. And you really want to trade the nice, clean, clear, precise setups, the ones that really show you where they're going. Okay, New Zealand Swiss. Let's move on to the next one. So we had a look at Euro Dollar, we had a look at Dollar CAD, we had a look at Euro New Zealand, Pound Swiss, New Zealand Swiss, and now let's move on to the others. All good so far, guys? Let me know in the chat. Please type in all good, or you're good, or put a smiley face, whatever you like. Just let me know you're still with me. All it is clear, and I will move on for you guys. All right, great. Thank you. Thank you for the smiley face and positivity. Always welcome. Next chart. Let's have a look at the next opportunity, which I'm going to take a look at gold. So gold is similar to the euro idea, as it's also related to the dollar. So weakness in the dollar, as we were looking at dollar CAD, weaker dollar CAD, weakness in the dollar, strength in gold, weakness in the dollar, strength in euro dollar. So the similar idea here. Last week as well closed bearish, was a pullback after this very strong, very, very bullish candle, which broke these structures here. You can see to the left, indicating a bullish momentum, a reversal in the market. And then we are now going to continue with that. So where are we going to continue it, and where are we going to get in? Let's look at the 4-hour. We've got this level here as a possible level. We've now reached it. Let's see if we get a reaction from there. Again, remembering FOMC Wednesday. My preference would be a much lower price. Can even include this area right here. So the lower price down here would be much nicer, better risk to reward than this one. We're going to have to wait and see which one is actually going to react. Wait for the price action to do its thing. At the moment, there's no price action here. It's a kind of a ranging market, very weak, very small candles, nothing of interest here. So let's see how it plays out. So nice deeper retracement first before going to the upside. And I do see a lot of upside here on gold. We've got this first target, which would be last week, which should be an easy one. This would be the next obvious one, next obvious high, and this high here, which would be quite a way away, you could say. All right, that's gold. So weakness in the dollar, strength on gold. We'll have to be patient and let it play out. Let's see what happens with that. Next, I'm going to go to oil. Oil was another one we looked at last week. So this is what we saw. This is what played out. It was quite clean on this occasion. Let's have a look on the weekly as always. So here was last week. I was looking for more bearishness to come and fill this gap and possibly the low. So I had these targets here, and this was the level to short from, which we did. In fact, we didn't reach the high here, and then we just ran lower very, very hard move down into these lows. So let's now delete all of this. That would have been should have been a very good trade. Let's just delete this, clean this up. So it's much nicer. It's always much nicer for your mind. Clear chart, clear mind. Much easier to think. You've got a clear chart. So we're going to move this out of the way. And let's consider what we've got right now. And what we do have right now is the following. We've got this low, we've got this high. I'm going to look at this again, even though we did last week. And we've got this deep retracement here, ranging market on the weekly basis. And we have this low now that has been taken out. And we are forming a possible new low or a possible reversal. As we are deep in this retracement, I'm looking for the market to go higher. And again, remembering that oil priced in dollars, weaker dollar, should in theory create stronger commodities, so stronger gold, stronger oil, higher prices. The question is this now a reversal? Is this a situation where we're now hitting a low and we're creating a new low and then we are going higher? Well, that's certainly what I'm going to be looking at with the idea of weak dollar. Now that we have reached this ultimate low, which is down here, we see we can just pinged it, went through it, and then reversed very, very hard, very sharply, which indicates that there is some reaction here. So where's next? What would be the next idea here? Well, the next idea would be to get a nice entry if this is in fact the low. So if we assume for a moment that this is the now created low after this big round down, then the next thing I'll look for is can even go down to the hourly. Is a nice better price, and then the move to the upside. Where is the upside? Well, we've got the next structural level here, which is easy to see. Then we've got one here. See that swing? And then we've got one here. So let's just remove the fib, just for clarity's sake. And now we've got some clear targets, some clear, much cleaner chart. And now you can see this day as well closed very, very bullish yesterday and Monday. Very big candle here. Closed bullish. I'd like to see a nice cheaper price. Similar idea to the others, pullback continuing higher. Now, the other possibility is that we have something else. If the market, we have to account for the fact that market can do something else. Let's see, what is that something? What could that look like? Well, that could look like a push higher instead. And if we do get a push higher without pulling back, without giving us a better price, then we'll just have to wait for a retracement, some kind of retracement to the level, and then continuation. Then the moment, I can draw a hypothetical level that we can see is around here. So this could be of interest, and then this is of interest. This level here. If that happens, again, just to remind you, the probabilities only stack in your favor when you've got some price action to add into it, when you've got some kind of reversal, when you've got the candles telling you the story, telling you the direction, telling you where it's intending on going. Always paying attention to the price. So we've got that possibility. If we're going to go higher, then we'll have to have a break of, can go to the daily and make it clearer. Break of multiple structures, which means a break of this day's high and this day's high. And that will, multiple break there, will give us a very, very good sign of bullishness. At the moment, I don't know what's going to happen. We had this reaction, but again, this could be a ranging day, could be even be a ranging week. I don't know. Let's see how it plays out. That's what I would say for now. So be patient with this one and let it tell you what it wants to do. If you're not experienced with oil, you may want to leave it to the side, focus on the others. Oil is very volatile. It doesn't move faster than a Ferrari, I have to say. And you really have to watch yourself there. You'll have to see some really clean setups to take it, to enter it. That's my little bit of advice for you in terms of oil. So watch out. Oil can be a tricky one sometimes. One of the biggest markets in the world. Okay, lastly, but not least, Bitcoin. Let's review what we looked at in Bitcoin last week and where we're going to go from here now that we have played out last week, where we're at the moment. What I was looking at is to tap into one of these two levels before taking a sell. That doesn't look like it's going to happen now. It didn't happen. We had a ranging week. Let's have a look at the weekly here. You can see this little indecision candle, very small, and on the 4 hour you can see it was just a big range here, really. What happened now is we had this gap, we moved lower, and you can see that here, right here, this little wick to the downside is a tiny bit lower than this one here. So the indication, the hint, if you like, is that we are possibly going lower, and the lower end is here, the 14K level that I was looking at initially. So let's just remove a few of these lines. Again, let's clean up the chart just to clear things up. And now be looking at these prices. So if we are indeed going lower and we're going to break lower, then what I'll be watching out for, break to the downside, some kind of pullback. We may pull back even to fill the gap, because we know that most of the time gaps get filled. The question is when, if it gets filled now or much later, I don't know. Usually it does, but in terms of the balance of probabilities, I go with the gap fill. So with that, this would be the idea. Break lower. At the moment, it hasn't closed lower, so I'll be looking for a nice close below. The moment it hasn't done that, the pullback, and then continuing to the downside to the 14K level. So much better price up here, much nicer, more expensive price. If you want to draw a fib just to make it much easier for you and clearer, you can see above the halfway level, this it kind of matches with the 61.8 fib up here. So that's a nice bit of confluence. If that doesn't happen, we go lower, then we just go lower and wait for a pullback. I don't know where the pullback is going to happen. Of course, market will do what the market will do, but this will be the first zone, the initial low, the first zone to possibly short from. And if it goes higher and the price action doesn't give us that idea, then this would be the level up here that I'd be interested in. Just having a look on the bigger picture on the weekly, you can see here, got this little gap in the price. This market is continuing to go lower. We're pushing lower, so the balance of probabilities is still to the downside. Obvious weakness, weakness, weakness. Very weak market so far. So the likelihood is that will continue. If it reverses, then we're going to have to leave it alone. The other possibility is that the market just reverses and blasts straight through all of these levels. If it does that, in that case, this level up here would be the invalidation area. And from there, if it moves higher, then I would be ignoring this idea. It would I just have to leave it to the side and just reassess probably next week. And if that's the case, then that's the case. Such is life in the markets. If it doesn't hold our probabilities, then we're going to have to leave the market alone and let it do its own thing until we have a clearer picture. All right, so that is Bitcoin there, and I think that covers it. I've covered all all of these charts, remembering that all of these are ideas. It's a balance of probabilities. Remember to manage your risk. Remember to trade carefully and trade with precision, and pick the ones that look cleaner. Just because we've got all these opportunities doesn't mean you have to select all of them, doesn't mean you have to trade all of them. It just means that I'm showing you what is happening in the market and what looks more likely. Okay, great. Thank you for your feedback. Thank you. You're welcome. Okay, so no questions for now. I'll end it here. Thank you very much for joining me. Hope you have a good rest of your trading week. And manage your risk. As always, my name is Dimitri. I'll see you on the next week's Trade Ideas webinar, and I'll go over some more setups. We'll have a few more opportunities there for you. All right. Hope that was useful for you guys. See you on next week's video. All right. Bye for now.